Today let's take up a question on special purpose books. I have put down a question here, so we'll be recording these transactions in the special purpose books. So it's a complete question here, and we have already done all the special purpose books. So let's do a question wherein all the special purpose books are involved. Now the transactions are as follows. Mrs. Amita started business with cash. Machinery purchase from Golden Furnishers. Purchase goods for cash. Purchase goods from Nikita Associates for Rs 50,000. Trade discount 10%. Sold goods for cash 75,000. Sold goods to Major and Sons worth Rs 80,000. Goods returned to Nikita Associates 10,000. Goods returned by Major and Sons worth Rs 15,000. Paid salary, paid rent. Purchased stationery on credit from Neetu and Company. Furniture depreciated by 10%. Insurance premium prepaid. Now we have to enter these transactions in the appropriate special purpose books. So first of all, let's see. I have made the cash book here, the format of the cash book. This is date, particulars, amount, now let's see what are the transactions which will come here. First one is Miss Amita started business with cash. So here this is a receipt for the business in cash, right? So here we will have 1st January to capital account. The amount given here is 5 lakh rupees, right? So it will come here. Now the next transaction, January 3rd, machinery purchase from Golden Furnishers worth Rs 1 lakh. Now machinery purchase from Golden Furnisher, this is a credit purchase, but this is not a credit purchase of goods. This is a credit purchase of assets, right? So it will go into the journal proper. So I have made the journal proper here. So we will have to put this in the journal proper, as this is purchase of asset on credit. If it had been purchase on goods, purchase of goods on credit, it would have gone into the purchases book. Here it is purchase of machinery, so it is journal proper, right? So the date given here is January 3rd and the amount is 1 lakh. This is 1 lakh rupees. Now look at the next transaction. Purchase goods for cash. Now this is a cash purchase. Purchase goods for cash. So that is January 5th and 50,000 rupees. So it will come in the cash book, right? January 5th, buy purchases 50,000 rupees, right? Purchase goods from Nikita Associates for Rs 50,000, trade discount 10%. Now this is purchasing of goods on credit, right? So this will go into the purchases book. Now the date is January 10th, right? So here we'll have January 10th, and here I'll write Nikita Associates, right? It's 50,000 less 10% trade discount. less 10% trade discount. So 10% on 50,000 is 5,000 rupees. So I'll have to deduct 5,000 here and then put it in the amount column. So this is basically 45,000, right? Okay. Now next entry, sold goods for cash 75,000 on January 15th. This is cash sales, right? So 15th January, to sales account 75,000 rupees. Now the next one is the credit sales. Sold goods to Major and Sons worth rupees 80,000. So now this will go into the sales book. Here I'll write the amount is 80,000. There is no trade discount, nothing is mentioned here. So just put the amount as it is, right? So this is 80,000, 80,000 like this. If there had been any trade discount, it would have been deducted as we have done it in the purchaser's book, right? Okay, now the next one, January 21st, goods returned to Nikita Associates. We had bought the goods from Nikita Associates. Now we are going to return it. So this is purchase returns, right? So see here, purchase returns book. The date is January 21st and the amount is 10,000, right? The first one is the details column and this is the amount column, right? In the details column we deduct the trade discount if there is any, right? In this case nothing is mentioned, so just put it like that. Then goods returned by Major and Sons worth rupees 15,000, January 24th. Sales return January 24th. Here I'll have Major and Sons return goods worth returned goods worth 15,000 rupees. Okay, then the next thing is January 25th, paid salary 20,000. This will come in the cash book, right? So January 26th, by salary account 20,000. January 27th, paid rent 10,000. So this is by rent account 10,000. Furniture depreciated by 10%. Now this has got nothing to do with any of these special books, that is your purchaser's book or cash book or whatever. This is basically a journal entry which will come in the journal proper, right? So here furniture depreciated by 10%, that is a depreciation on the furniture, right? So here you will have depreciation is basically a loss. So depreciation account will be debited, right? Debit all expenses and losses. And here I am writing furniture. This is we are purchasing a machinery, not a furniture. So this is machinery depreciated by 10%. The cost of the machinery is 1 lakh, so 10% on that comes to 10,000 rupees, right? So here in the journal we will write this entry. 29th January, depreciation account debit to machinery account, that is 10,000 rupees, right? Then there is one more entry here, one more transaction, insurance premium prepaid. When the insurance premium is prepaid, you are giving an expense in advance, right? Okay. So that is, prepaid insurance will be debited and insurance account will be credited. Fine. This is again something which will come in the journal proper. 30th January. Fine. The amount is 10,000 rupees. So these are the three transactions which will come in the journal proper. Appropriate narrations should be written for them, and the other transactions we have put in the proper book. So this was our cash book. All the transactions relating to the cash book have come here. Now you can close this cash book. Fine. The amount on the debit side is 5,75,000. And here it is. So on by balance carried down, this is 50 plus 20, 70 plus 10, 80. So 5,75,000 minus 80,000, that is 4,95,000 will be your balance here. Fine. So the cash book is balanced, and then February 1st we'll have like this, right? As for the other books, this is purchases account. Purchases account is always a debit, so this is the only transaction that we have here. So here we will write purchases account debit 45,000 and sales account credit 80,000 rupees, right? Similarly for the purchase returns and the sales return, purchase return is always a credit and sales return is a debit. So here you will write purchase returns account. Purchase returns is a credit and sales return is a debit, right? So here you'll have whatever is the total sales return account debit 15,000 rupees, right? That's it. Now once all these things are done, then all the balances we have put here, then the next step is to transfer all these balances to the appropriate ledger accounts. So here we have taken up a complete example in which we have seen a question. We have seen a question in which transactions pertaining to all the subsidiary books are there, and the transaction suitable to each special purpose books have been entered in their appropriate books, right? So with that, I'll come to the end of this session. Bye.